If you can build a tool where I can point and click on any spot on the chart and it shows the volume weighted average price as a moving average from there, I'm in. And they did it, and they did it quick. And now, it's in TrendSpider, it's in, Stock Charts just added it about a month ago. Optima has it, Wealth Charts has it. So it's becoming a lot more out there.
This is the How to Trade Stocks Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell. This is the How to Trade Stocks Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell. Hey there, traders. Welcome back to today's How to Trade Stocks Options podcast. Today, we have a special lesson for you. I'm putting it here on the podcast because I really believe that this is going to provide you massive, massive value. And that's what I'm trying to do here. And hey, listen, if this podcast was useful to you at all, I really highly suggest that you go check out the full trading course at AIStockTradingSystem.com. That's AIStockTradingSystem.com. Hey, make sure you subscribe and hit the bell so you'll be notified every time we give you more tools, tips, and tricks to help you trade faster and trade smarter every single week. Hey there, traders. Welcome back to today's How to Trade Stocks and Options podcast. Today, we have a special guest online, Brian Shannon. Brian is the founder of AlphaTrends.net. He's also a certified market technician and author of the book, Technical Analysis Using Multiple Time Frames, which you can get on Amazon today, right now, in fact. And Brian, thank you so much for coming on the show today. I'm really excited to have you on. You're kind of a little bit of a celebrity, I got to say.
Internet celebrity, man.
Internet celebrity, yeah.
Celebrity. It's not like a Hollywood guy, that's for sure. Thanks for having me on too, Chris.
Yeah, absolutely. So what I wanted to do today was really just learn more about you, more about your process, more about your company, and dive even into the anchored VWAP, which is what I know that you are known for. So what I'm gonna do is I'm gonna hand you a hot mic, and just give us your background. Tell us the Brian Shannon story. I'm really interested to hear this.
Okay, well, let's start back when I was about 10 years old, sitting in my dad's lap watching Wall Street Week, and that was 43 years ago. So. I used to watch that with him, just to kind of hang out with my dad, and picked up on things. And, when I was about 12, I had my first stock trade, which is a company called LoJack. And, we bought it at, I think it was $5 per share. And then about 3 months later, it doubled. So I thought I was a genius. My dad, so I had, money saved up. My dad basically gave me leverage. So I had $500. He put up $4,500. We bought 1,000 shares, and I made $5,000 at this young age. So I was kind of like, why do people work when you can do this, right?
Right.
And I was went through college and all that. Get out of college with a business degree, which was just general business. And then started out at a retail brokerage firm in Boston. That was 1991. And I was more interested in being a trader than a telemarketer, which is what a stockbroker is. So, I did the broker thing for about 4 years, moved to Denver, and was a broker here for a little while as well. But it gave. I like to kid around about it, but it's. I didn't do any damage, and it wasn't nefarious. But I got to practice with other people's money. Being a broker, and I was a lot more aggressive than what most of the branch managers wanted me to be in terms of trading and moving in and out of stocks. But I learned a whole bunch. So I guess it was maybe 95 or 6. I answered to IBD used to have this on the back page there was a little thing about put up $25,000, get $250,000 buying power. So generic trading was the name of the company, and I went for it. I shouldn't have. Anyone would tell you based on my income at the time, the amount of savings I had, my pregnant wife, and no other source of income. But fortunately, I've got a very strong sense of risk management. So I was able to make it work, and I was consistently profitable. I, then branched into opening a day trading office in Denver, and then getting that absorbed by another company called MarketWise. And MarketWise, I was the head of proprietary trading there, as well as trading their funds, and created educational content. Worked on putting classes and that sort of thing together. So I left MarketWise in I guess it was about 14 years ago, and then started Alpha Trends. It was alphatrends.blogspot at the time, because I didn't know anything about websites. I still really don't, but so alphatrends.com, as you notice, is some wacky astrology type thing.
That's exactly what I did. I was like, all right, let me talk to Brian real quick. I'm going to pull up alphatrends.com, make sure I am in the right place. And I'm like, that is not his site. And then I Googled it and I was like, oh, it's alphatrends.net. So when you guys are going to go look up Brian, alphatrends.net is the right place to go.
So I started doing YouTube videos, and I was kind of one of the first ones to do that. And that was before it was actually YouTube. It was Google Videos, and then Google acquired YouTube. So, I've been doing that, and kind of built the audience. And the people at StockTwits, Howard Lindzen, approached me and said, "Hey, you've got this audience. We can build a product for you, and sell subscriptions. You're getting 5,000 views on your videos. Why not monetize it? Let's do it." So that's how I got into the kind of the subscription business. I trade every day, sometimes too much. But it is, it's still my passion. I mean, after all these years of doing this full time, I've had slumps and times over the years that maybe back to the high frequency days, let's say 5 years ago, when markets weren't really making as much sense. I was kind of wondering, am I getting too old for this game? It's not making sense anymore. So I gravitated more towards swing trading again, because that's where I started, was swing trading. Then got really into day trading, and now it's more, I try to be a swing trader. I don't try to day trade, but I'll take them if they're just right there in front of me. Mm-hmm. So that kind of brings it full, and I wrote the book in 2008, and that continues to get a lot of great reviews, and here we are today. I'm made a name, I guess, the last few years for the anchored volume weighted average price, and that's pretty much gets us up to speed, I think.
All right. Well, I tell you, I remember when I was leaving college, I interviewed with Edward Jones, and that was I was able to see it for what it was, like you were talking about.
Right.
It's just sales. I mean, it's really like you're getting somebody's money into this account. Do it again tomorrow, every single day. Yeah, and that just wasn't for me. I'm no salesman. Like
I wasn't either. I learned a lot, but I wasn't a natural born salesman.
Mm-hmm. And being able to practice with other people's money, what a luxury that was.
Right.
Because I mean, I tell people this all the time. I lost 5 figures, trying to figure out how to trade, and then once I figured it out, it's like, oh, okay, I was overcomplicating everything, and now I've simplified it and just made much more money and much more sense. So who would have thought?
And you're probably holding losers more. I mean, you're kind of forced to hold a loser at a brokerage firm in a way. Like, why did you sell that stock when it was down? Well, because it's continuing to go down, and then you got them into something else. Be careful so you're not churning an account. It was never the intent to produce commissions. I mean, that's always there, but you got to do the right thing for the customer, and there's just so many conflicts of interest in the way that business used to be with the super high. I mean, they were $200-$400 commissions one way, and that just that's a huge obstacle to start with.
Do you think that the big commissions were maybe a good thing? Because like now we have 0 commissions and everybody. And then a lot of people who got their stimulus money, right? I heard a lot of horror stories that they just blew it, or they did really well, and then they didn't actually know how to trade, and then they lost an even bigger sum, right?
Yeah.
Do you think that the race to 0 maybe hurt some people?
I'm sure it hurts some because there's just going to be that type of personality out there. It certainly, I think, has increased the frequency of people's trading
Oh
because
yeah.
that's no longer an obstacle. But I don't think it's a bad way to learn with a $1,200 or $1,600 stimulus to blow it up and learn that mistake before you do it with a big account, right?
Yeah. Oh yeah.
Um, in without having those obstacles of commissions. I'm all for the Robin Hood type model, and I think it's, if I had that when I was younger, who knows how my career might have been different. But there's a lot of obstacles that have been removed for getting into the market, and I think that's a fantastic thing.
Oh yeah, I couldn't agree more. I mean, being able to get in and out. When I first started, it was about $10 commission, which is still
Mhm.
now these days it's like outlandish to even think, $10 commission either way. That's crazy. And especially like for example, doing an iron condor, right? Let's say I'm telling you like this is how I started, right? Iron condor, $1 wide. The max profit on the trade I could have made was like $40, and then I'm paying
Mhm.
$20 in commissions either way. Like there's
Right.
no way I could do this.
No.
It doesn't work.
No. Yeah.
So, yeah, the technology has enabled a lot of really incredible changes, and that I'm really grateful for. And one of those changes, speaking of technology, let's lead that into the Anchor VWAP.
Sure.
So I've heard of VWAP, but VWAP is like one of the newer items in my vocabulary, I guess you could say. Like I
Mhm.
remember people talking about VWAP and things, and I was like, "What is a VWAP?" And for the audience out there, it's volume weighted, uh, volume weighted average price, and it it's interesting because it shows where buyers and sellers are holding. Right? Am I saying that correctly?
Yeah.
But
Exactly.
okay, I was just going to say, but you've taken it one step further.
Well, so it started out in 1988 as a benchmark for institutions who wanted to see how well their orders were being executed. So if you had a 500,000 shares and you said to Fidelity or Merrill or whoever and said, listen, buy me a 500,000 shares of Intel today, and the stock traded between 88 and 91, and you get filled at 90.25, you look and go, well, what how does that compare to anything? So what it did was actually was for the course of one day, the volume weighted average price. If you took it's like a dollar cost average, Chris. If you take $1,000 and put it into Apple each and every month, at the end of the year, your cost basis is $12,000, and you might have bought 8 shares 1 month, 3 shares 1 month, or whatever. So it's your dollar cost average from any starting point. It happened to be, it started just for that day, the period.
Mhm.
So it was the average price the business was transacted at, buyers, sellers, short sellers, etc. So I kind of stumbled into it in about 2004 as a technical study, and it was a horizontal trend line that I could start at any point, and then I would move it across the screen, and I would see it, going up and down as I moved it across, and I started to notice that we're like, fine, it would bounce perfectly at certain levels. So, fast forward to about, so I guess 2014, the people at TC 2000 were kind of courting me to use their software, and I said, listen, if you can build a tool where I can point and click on any spot on the chart and it shows the volume weighted average price as a moving average from there, I'm in. And they did it, and they did it quick. And now, it's in TrendSpider, it's in, Stock Charts just added it about a month ago. Optima has it, Wealth Charts has it. So it's becoming a lot more out there as a tool, and it allows us to really, I kind of view it as a sentiment indicator. So if we say, the stock gapped up one day, that's an event. It's a measurable event. So if we take the average price from that gap and we can see that the stock is rising and holding above it and finding buyers, it's acting as dynamic support, or on the opposite side as dynamic resistance. One of the best places to really look at it is in the easiest way for people to initially see it is in an initial public offering, IPOs. They're just great because everyone has the same starting
Mhm.
point. because one of the things is, well, where do I measure from? Where do I start my anchor? And you can do month to date, year to date. You can do it from 11:30 on, and that is you can really get stuck in the weeds on it. But if you use swing highs and swing lows, you can say from that pullback high, the average price as it's declined is declining as well. When it gets back above that, it tells me that the average participant on the long side is making money, and the average short is now losing money in that position. So now if I can find that low risk entry where I have a tight stop, it makes sense because the buyers are back in control.
Okay, so this is really interesting. So I've played with it some, but not really in the depth and breadth that you have your knowledge in it. You've kind of taken this almost like deep level of indicator, and you've kind of brought it mainstream, right? So I mean, something that was only available for institutions is now available literally on the right click on my TrendSpider screen.
The crazy is it's not even on Bloomberg, Chris. I mean, they pay what, $12,000 a month, a year. It's expensive, but they don't have it there. It's crazy.
So why do you feel that this is? And I only ask this because this is from an outsider's perspective. This is what you're known for, and I think that's really cool to be known for something. Why do you feel that the Anchor VWAP is so powerful and such a tool that all traders should use?
It shows the actual supply and demand and who's in control from any point in time. I can measure from any point in time. We can look at it and eyeball it. We can look at it as simple moving average, time-based. But the market isn't based on time. We put the time constraint there. Instead, it's event-driven most of the time. So we can say, from that Federal Reserve event, from the election, what's the average price? Are the buyers or sellers in control? And there's just no second guessing. It's not overbought. It's not oversold. It's who's in control. And it often acts as dynamic support on pullbacks. You'll see that it'll find buyers magically at that number. It blows my mind. I was just tweeting about that yesterday, that it blew my mind on the S&P 500 that the most recent pullback hit perfectly on a volume-weighted average price level that I had identified in advance. I didn't buy there because I was thinking, there's no way. But I mean, it nailed it to the low. And it's true supply and demand. There's no subjectivity really to it other than where do you place the anchor. And if you're doing it at, a swing high or a swing low, it's pretty objective there. If you use it properly, it can really give you that key metric of who's in control from any point in time, because we all have different time frames. I mean, a day trader might use it from the 2 o'clock high to the 2:30 pullback low and buy as it breaks above that. Whereas, an investor might look at a chart that has, kind of created a longer term 2-year base. And now it's getting back above the volume weighted average price from that high 3 years ago. Now we've settled in, the supply and demand is balanced out, and the buyers are gaining control. Now we can get involved, manage risk, and see if the market will let us continue to hold in the direction that our bets are unfolding.
So whenever you're talking about the recent low on the S&P that it bounced off of, now to give the audience some context here, this is November 6, 2020 that we're recording this. The elections happened, but we still don't have a president decided yet, which is fun in one way to say. But the market kind of stair-stepped down and then took an elevator up, which is the opposite of normal times.
Right.
Where did you anchor it before that in order to have it bounce off that support level? What was your key that you anchored from?
Great question. And I will just refer people over to Twitter, where my handle is Alpha Trends, if they want to, find the chart. I think I posted it maybe even November 1st or something like that. But what I did was first I took the low from the pandemic low in March, and put a volume weighted average price on that bottom. Well, we only knew it was a bottom about, or an important level at least, a level of interest about a week or so after that low was made. So when I put a volume weighted average price on that, it then pulled back and hit it about 3 weeks later. So when it hit it, it bounced dramatically from there. And what I do is called, laddering or stairs, a handoff, or, passing the torch and putting it from where it hit. So if I anchor it off that low, it comes down, hits that, and bounces. Then I'll put one off of the bounce low. Okay. And this is just through experimentation that I found out that, the buyers regain control for another momentum campaign. And then 3 months later, it comes down and hits a new intermediate term low. So this volume weighted average price was actually anchored off of the May low. And that May low was hit in late or mid-September. And then again, just what was the date here? I'm sorry, October 30th. It hit that date. And that's the day I posted it actually on Twitter. I didn't expect that, I said, here's a level of interest. In, the way I look at it is, a lot of people say the market is at support or the market is going to find resistance here. We don't know support and resistance till after the fact. So I like to call them a level of interest. And what I mean by that is when it comes down to this level of interest, that it doesn't tell me just blindly buy. Some people do that, and but to me, I tend to be more risk averse. So it tells me it's a level of interest, and what that means is I want to look at shorter term timeframes for actual evidence that the buyers are gaining control. So it comes down to back to my book, technical analysis using multiple timeframes. We want trend alignment. So we've got a major uptrend. It pulls back, intermediate term, we're in a downtrend, and then it settles in, and short term might turn sideways and then make a short term higher high. That's where I want to get involved, where the momentum shows me that we have an important low. I don't know if it's going to be the low, but if we make that higher high, then I can get involved on the short term time frame, protect myself with a stop, and the rest is up to the market. So it's just fascinating to sit down with a chart and click on important highs and lows on any chart in any time frame, and notice how the volume weighted average price will just magically be the exact level sometimes. It blows my mind. I've been doing this, using the volume weighted average price, first discovered in 2004, and it just continues to blow my mind. I can't say it enough.
Brian, I don't know what your hourly rate is, but everybody who's listening to this podcast, you just got a incredible value of $0.00 to listen to Brian with that crazy knowledge drop right there. Brian, that was incredible. Thank you for that.
It's tough to envision without the chart there. I hope it wasn't too esoteric, but
no, it's good. Like in my head, I'm thinking, holy cow, this is so good. So man, that was awesome. Okay. So we got it bouncing off the lows. And one of the things that I learned in my expensive endeavors and how to play the game of Monopoly, I guess you could say, is right. Buying when things turn around instead of trying to call the bottom. And you said something there that I really, 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 I believe in my core, and that there's not support and resistance. And I've just I don't know, just the support and the resistance just grinds on me. But the way you described it as level of interest really, I think, is a game changer. Because you're totally right. There's nobody that's saying as it's dropping, heading towards that anchored VWAP or any other moving average or anything else you want to see, that it's going to magically bounce right off of that point. I was just going to say, but the point that you also extended upon that with is that you're looking for it now to have found that bottom and then start to reverse and go higher. And then that's your signal. And that right there, I think, if you didn't already take notes on this, go back about 8 minutes and listen to Brian again. That was super wisdom right there.
Well, thanks. It's and I'll tell you, I kind of talk about this once in a while on Twitter. I'll be in a grumpy mood and say, I just don't understand this buy the effing dip, people. You don't buy the dip, buy after the dip, and the buyers have regained control. Why put your money at risk? Why play guessing games? We can actually see objectively, where the buyers regain control. The thing is that we have egos and we all want to be so smart that we pick the bottom. But a pullback might keep pulling back below your 10-day moving average, below your 20, below your 50, and below your 38.2% retracement. Those are all great levels of interest as well. At 20-day moving average. A lot of times we find a bounce at a 20-day moving average, but it doesn't mean you just blindly stick your bid in. Understand the psychology of what happens at that 20-day moving average. Maybe the stock got 2-3 standard deviations above it, and we've got some aggressive hedge funds that decide we're going to short it down to the 20-day moving average, because typically our back testing says it will come back to the 20-day moving average. So it's at that 3 standard deviations, and they start adding supply, and that slows the stock down. Other long players are saying, hey, it's slowing down. Maybe I take a little bit of my profits off. And the sideline cash says, hey, it's kind of extended. I'm going to stop buying up here. So what happens? We have more supply and we have less demand. The stock starts trickling down. We find buyers along the way. But shorter term, we see this pattern emerging on, let's say, using 10-minute or 15-minute candles. We see this pattern of lower highs and lower lows. It gets down to that 20-day moving average, and maybe it took a week and a half, 2 weeks to get there. And then what do we see? Well, we see the 20-day moving averages there, and a lot of us have been trained, whether a 20-day or a 50-day or whatever, that there's often support there. So what happens? Well, the hedge fund who sold short up there says, this was our objective. Because there's often support here, we're going to start bidding for the stock. So they start adding a little bit of demand. And then the long institution who maybe sold some up above is going to say, hey, let's support the stock. We sold $500,000 on the way up. Let's bid for another 100 to help create the chart and bring further demand in. Sidelined cash comes in and says, hey, I'm going to stop selling this. I'm going to start. So the point I'm trying to build is it's supply and demand, and trying to understand the motivations of other people, that the shorts are going to try to cover in there and take their profits. The longs are going to start adding. Sideline cash starts looking at it. So you start to see on that 10-15 minute time frame, you're getting, it's not 10 or 15 minutes of time, but over maybe that week and a half of pullback, we're looking at 15-minute candles, and you start to see that the pattern of lower highs and lower lows is starting to turn sideways. Some of the moving averages are turning sideways. It's neutralizing. So it says, hey, we're at that level of interest. This is what we anticipated. Now what we need is that short-term higher high. That's where I'm going to participate. So we anticipate, we participate, we set our stop, we take a little bit on the way up. As it starts making higher highs and higher lows on that 15-minute time frame, we raise our stop up underneath and leave the rest to the market, and understand the psychology of that supply and demand, rather than just say, well, the 50-day moving average is support, so I'm going to buy there. What a stupid approach that is.
God, you're so right. Oh, Brian, this is such gold right here. Okay, so there's so much to unpack there. So, one of the things I love about TrendSpider is being able to backtest right on the screen. Yeah. And that goes back to what you're talking about there, is finding like a moving average or something that historically has shown to be the level of interest, right? And I love that, because that's kind of my go-to. It's just selling put spreads on back-tested moving averages, right? Like the SPY, maybe it's a 15-day or maybe it's a 20-day or something like that. Anytime it's above that, I'm like, I can sell put spreads and it's fine, because I can have it come down all the way to those the moving average lines. And it's so key there that just because you think something's going to happen, until the market actually shows that it's happening, nothing's happened. And I remember in Mark Minervini's, it's all in your head, right? And I remember in Mark Minervini's book, or one of the books, he talks about like you never know how low can go, right? Or something along those lines, right? It's true. You've got a chart and it's trending down, and you decide, hey, trust me, I've blown up my account twice. One of the times I blew up my account was because I decided that I was going to pick the low in gold. And as gold was like clearly trending down, like any fool can look on a chart and see that it's trending down. This guy was like, it's turning around here. I know it. Yeah, that was a huge mistake.
Well, but you know what? It's down too much, or our stock is up too much.
Yeah.
if there's still sellers in the market, and understand what drives those sellers. Maybe they're, getting margin calls. Maybe they're just, mass liquidating for a reason we don't know, but we'll find out down the road. That's why they say the market's a discounting mechanism. It discounts the past and looks forward to the future. So it's not about today's headline. And certainly we relearned that with the pandemic, that, as it started climbing out of those March lows, everyone was looking like, why is this thing going up? It doesn't make any sense. I'm going to short it. It doesn't, and just get run over until you start to listen to the message of the market and realize that it's price action that matters. Only price pays.
I couldn't agree more. And when I first started, I couldn't tell you how many indicators I wanted to stack on top of each other. And then I would just throw it all out the window because I'm like, I know better.
we all do. Trust me, I did. That's how I stumbled into the volume weighted average price. I mean, we should always strive to be better. Now, as I'm, later in my career, I'm skeptical of most of these new oscillators and indicators. But I'll give them a look, and I'll still give them a look, just because we're always trying to crack the code, right? And get that magic indicator which doesn't exist. To me, the anchored volume weighted average price is as close to it as you're going to get, because it actually measures price, volume, and time combined to give us the true sentiment, to the actually what people are doing with their money, not what the analysts are saying, not what the headlines are saying. Cut out all the bullshit. It's about price, volume, and time, and where do I fit in with my time frame and my personality. And that's a big thing that people don't address enough, I think, as well, Chris, is that what is your time frame? I identify as a swing trader. You're more of a spread. Is that right? You sell spreads?
Yes, but I still look at 7 to 10 days out. Like, that's my go-to. And I mean, I've tried to day trade, and it ain't for me. I can tell you that for sure. But I've also tried longer. I've also tried selling spreads longer term, and that really went against me, because that's just too long to be in a trade, because I mean the market can do anything in that time. Right. So that's what I've kind of narrowed it down to, is in the 7 to 10 day time frame.
Yeah, that's kind of the sweet spot. For a swing trade, it's I want to hold maybe up to 3 weeks. Generally, they won't let me, because it starts breaking that pattern of higher highs and higher lows. So it's not up to me. It's up to the market. Sometimes it's up to me if I'm being stubborn, if I think I'm extra smart, or I still, after doing this for so long, I still am amazed sometimes that I can find this other personality of mine still finds its way into my account once in a while. I've gotten so much better at maintaining it and recognizing it and getting rid of it immediately. But it's crazy how human nature can still creep in once and you look at it and go, wait a minute, why am I doing this? This is completely stupid. But I still will do that once in a while.
Brian, I call that monkey brain.
Yeah,
and
exactly.
I actually have a notepad on my computer that it's called monkey brain, and I'll just jot down my thoughts there, because otherwise I am super ADD, and I can have a million things going on all at the same time, and it's I got to get this off my mind, and I'll come back to my monkey brain list later. Right. So yeah, dude, I know what you're talking about.
Yeah, this is a list I was working on right before we spoke. I've just got all these little symbols, and I wrote down your recommendation for a book as well, the Rich Dad Poor Dad. So
New Trader, Rich Trader. That's it, from Steve Burns.
Oh, Nutrient Rich?
New Trader, Rich Trader. By Steve Burns.
Oh, right. Okay, I'm sorry.
It's written like Rich Dad Poor Dad, and that's what I love about it. Is it's such it's such a good novel. I've actually
scratched out, rewrote.
There you go. I've had Steve on the podcast, oh man, a dozen times, maybe more. Such a great guy. But that book is just so good. And I have just reread it. What month is this? In the last 6 weeks. Just because it's back to, and as the qualities of a rich trader, it's okay, I've got this, I've got this, I've got this, I've got this. Wait a minute, I need to go and revisit that. It's been a while since I thought about that. Let's go back and check it out real quick. And honestly, if the audience doesn't already have it out there, I'll drop a link below, and a link to Brian's book as well on Amazon. But I mean, just being able to hear and that's one of the reasons I love doing this podcast, is because I can actually talk to people, and it's not like me just like, do this, do that, do this, do that, right?
Right.
It's a conversation. And I'll tell you, Brian, one of the things I found is 9.5 out of 10 people I talk to on the show pretty much all say the exact same thing. And I think that really means that success leaves clues.
Right.
And it's these people who have picked up these clues, right? And they're all following the same path to get to the success goal. And I think that's one of Tony Robbins' quotes: is "Success leaves clues," and you just got to know where to find it.
Right. Yeah, I completely agree. I mean, and they always say, the market leaves footsteps. The institutions leave their footsteps. You can see the accumulation, and you can ride that wave and let them do the dirty work of buying the pullback and creating the support. Because we're not going to do it with our accounts. I mean, even if you have let's say you have a $20 million account, you're not going to impact the market at all. You need the $1 billion funds to create support. And, why put your money at risk and buying that pullback just because you think it's a good stock and it's cheap or whatever? How many times have they said that, maybe not in the last year, but I think that I heard that Amazon has had a 60% plus drawdown in all but maybe the last 2 years. But every single year as a publicly traded company, drawn down 60%. Those are massive drawdowns. And if you're levered at all, or if you become emotional, you're always going to sell at the bottom. If you're trying to pick the low where you think it's a great company, it's down 20%, it's got to be a buy. Now it's down 30%. What do? Do I buy more? 40%?
You double up.
Yeah. You just get into that cycle that, you can't. Now I can't admit I'm wrong. I'm married to this thing, and the best thing to do is just peel that Band-Aid and say, start over. Let me regroup, refocus here. You pull it off right at the worst time, but, refocus and get your mind back too.
I have a course, and in the course, one of the lessons talks about, cutting your losses short and letting your winners run out of control. And it was a quote that I saw somewhere, and it was just such a brilliant quote. But it's the concept of buying high and then selling higher.
Right.
And when I've tried to explain that to people who have never traded, or they've just casually traded, or maybe they're just like investors and things like that, the concept of buying high and selling higher like blows their mind, Brian. They look at me like, no, you're supposed to buy low and sell high, you idiot. What do you know?
Exactly. And it's counter to everything we've learned about consumerism in general. I mean, we wait to buy things on the Thanksgiving sale or the New Year's sale or the, Labor Day sale, whatever, because we know those are going to be there. Why would we pay this higher price? But in the market, it's about momentum is what I think people don't understand, is that you want the wind in your sails to your back, as they say. And if you can wait out that corrective mode, let it turn sideways and get involved at the first sign that there's a higher high, and then protect yourself, well, it does a couple things. Now you can take a maximum share size because you know your risk. And you're with that momentum, the chances are you're going to have a better opportunity to be right from the start. It comes down to definition of trend. People are trying to buy stocks and pullbacks all the time. But if a stock in a downtrend, they're thinking, well, it's in a downtrend, but it'll bottom soon. There's just more opportunity on the short side because lower highs and lower lows. The math is simple. It drops 3, it rallies 2. It drops 5, it rallies $4.80. The sum of the declines is greater than the sum of the rallies. Why try to buy it for those rallies? Especially when you consider momentum, and again, the math just doesn't work.
One of my brother-in-laws, he bought ACB. It's one of the marijuana stocks.
Yeah.
When it was, I think it was around like $10 or so.
Okay.
And when it was like, what is that?
He's break even today.
Is it? Oh, okay. It must have been on a run. I think
it's about 8 now.
Are you looking at it right now?
It's $10 right now.
Look, you just happen to have that up right now. You're a pro. It was like $4 or something. And
3 days ago.
Oh, was it 3 days ago?
Yeah.
Well, this is a while. I mean, we're talking a couple years ago that he bought it, and it dropped and it dropped, and he called me and he's like, "What do I do?" well, were you planning to get out? And he's like, well, I kind of doubled up after it dropped to like 6. And I'm like, okay.
Right.
And I was like, I know you don't want to hear this, but I would probably get out. And he's like, oh, I'm married to it, right? And like you were just talking about, and
Yeah.
it went down lower and lower. And and then he called me the other day about another stock, and he's like, it's down. What should I buy it? And I'm like, no, don't. It's down for a reason. I was like,
Right.
if it gets back up, let's call it like 200. If it goes over 200, maybe then's a great time. But now when it's down at 180 and it was at 200 a couple weeks ago, now's not a great time. Like obviously people are selling it for a reason. Are you really wanting to buy the things that they're getting rid of right now? Or
Right.
do you want to be scooping up all the things like this is 2020. Do you want to be scooping up all the toilet paper when everyone else is trying to
Right.
buy it? Or do you want to be getting rid of all the toilet paper when everyone else is trying to buy it? You know what I mean? You
Yep.
gotta work with the trends.
Yep.
So sorry, that was a crude example, but
No, it's a good
2020 has been
example.
crazy.
It's common sense. I mean, it seems common sense, right? In everyday activity, it's common sense. But then when we get into the market, we look at it and say, hey, but it's Apple, IBM, whatever, it's Tesla. But when it's going down, let it go down without you. Wait. And if you miss it, you miss it. People beat themselves up, as they
Oh,
say, though.
yeah.
It's better to be on the sidelines in cash than it is to be in the market and wish that you were in cash.
Mm-hmm.
There's that peace of mind from being on the sidelines, and the FOMO starts kicking in. I get that too, but if you have confidence in your system and your ability to look at the market objectively and find the right opportunities, you're going to miss trades. And if you're being disciplined, you're going to miss trades. If it gaps up and you say, my rule is I don't buy them if they gap up this amount,
Mm-hmm.
and then it goes on another 10% the next day, it happens. It happens to every one of us. Trade and engage the market on your rules. If you have the knowledge that they are good rules, it's hard to get there, of course, to get that knowledge and ingrain it into a strategy, a system that works well for you. But once you're there, trust the process and let it work for you.
Mm-hmm. Yeah, well said, Brian. I got to tell you, this has been a really good chat. I feel like we could go hours and hours on this. So let's shift over to your book real quick.
Okay.
Technical analysis using multiple time frames. When I discovered multiple time frames in TrendSpider, I was like, blah, this is awesome. I love being able to see the daily next to the hourly, or the 15-minute next to the daily, or something like that.
Yeah.
On the same chart, having one trend line and then the other trend line just right beside it. That is so cool. What compelled you to write this book?
I didn't really see that there was an approach based on it. So the subtitle is How to Profit from Trend Alignment. That people want to buy. One of the most common things I see is people asking me, what do you think about, let's say, ACB? They might ask me that today. I'm like, are you out of your mind? It was just $4 3 days ago, and it's 10. You want to buy now?
It's a great deal, Brian.
Yeah. Where has it come from, right? Has it expended a lot of energy getting to where it is? And right now, it's right at a declining 200-day moving average. It's also right at the declining year-to-date volume-weighted average price. So that's where it has the potential to go, where it's likely to find supply. It's a level of interest on the upside. It doesn't mean I'm going to short it there, but I sure as hell don't want to buy it after it's gone 150% in 3 days. Where has it come from? Can I identify a low risk entry point where I can put my stop pretty tight? Or do I put my stop now at $5 a share and it's 10? That's just dumb. What's your upside? What can you reasonably expect when it's at this level of interest that might become resistance on the upside? So trend alignment is simply trying to get involved. Let's say it pulls back over the next week and a half and hits a low of $6.20. It turns sideways, and then it's at about 730, and it breaks a higher high. I'll buy it at 730 and put my stop at maybe 670 if that was the most recent relevant higher low for my time frame. So my stop is going to go underneath the most recent relevant higher low once it makes that higher high. So because what am I trying to do? I'm trying to participate in an unfolding trend, an emerging trend. what's the definition of trend? Higher highs and higher lows. So if I buy that first higher high, and not above 10.5, but as it, the pullback settles down and comes in, that trend, the trend within the trend is what we need to focus on. I don't want to buy the breakout above $10. That's, where does your go? So that's kind of what motivated me to write it. And it actually was, I have two sons who are, my older son's 25, and I kind of thought it would be a great way for him to learn it as well. So as you said, it's a textbook, but it's written in plain English. It shouldn't put you to sleep if you have an interest in the market. Anybody else, like if you have insomnia and you're not interested in the market, here you go.
Yeah. So how long did it take you to write this? It looks like a big book.
It took, so the interesting thing about that one, Chris, is that it took me probably about 6 to 9 months to write, which is pretty quick actually. But for years prior to that, probably about 6 or 7 years, I had been writing outlines for a book, and I had about 20 of them. And I just kind of put all my outlines together and got it organized. And then after that, it just kind of, I told my dad this. I said it kind of wrote itself. It was really weird because it had been rattling around in my brain for close to a decade. And then when I finally, got organized, it was quick. So I'm writing a new book about the anchored VWAP, and
cool.
I'm embarrassed to say I started it about 2 years ago, and I'm just picking it up again after basically letting it sit since February of this year. So for 10 months, I've done nothing with it, but I'm gonna do it this time. I've got about 40,000 words, which is a lot of words, and I've got a ton of charts compiled. So hopefully I can get that out in the first half of next year.
So, man, this is really cool. So what, I'm going to ask a probing question here, Brian. You ready?
Yeah, go ahead.
Why'd you put it down?
Why what?
Why'd you put it down? Why didn't you keep working on it?
Some people call it writer's block. I don't know. I got tired of it. I wasn't progressing with it. And then I put it down for a little while, and I was telling my wife, it's kind of like doing your taxes. You get like 90% of the way there, and then you set it down until April. And then let's say in January, you're like, I'm going to get it done quick. You get 80% done. And then in April 12th, you go back and you're like, I forgot how I organized this whole thing. And you find you have to do the whole thing over again. It's kind of been like that. So coming back to it has been kind of intimidating, that I have all this work there, but I kind of forgot where I'm not a good note taker. I try to keep it all up in my head, and that's not the best system. So I have to kind of start over, reread it, reorganize it, rewrite sections, that sort of thing.
So what is, what's
bottom line? Mental defects. Let's just say that.
Well, what caused you to come back to it? Because now you've had it for a while. You got something else on your mind, so we stopped writing on it for 10 months. I'm betting something came across your day, and you're like, I should get back on that book. What was it?
It's just that it's there, and I have so much of it done. I mean, I tweeted, maybe put it on Twitter about a month ago, said, I'm writing this book, and this is the first time I've really made it public. So now I'm accountable to someone else, right? So the reason, though, is just because, and what would actually annoy me is if somebody, meanwhile, comes out with an anchored volume weighted average price book. I'm like, are you kidding me? So there's the get it to market as well, and it's just, and people are ready for it. I mean, the popularity of the anchored VWAP over the last year and a half has really exploded. Mm-hmm. I mean, and thanks a lot to the people at our friends at TrendSpider as well. They've really been big promoters of it. And now, as I said, in the last year and a half, they added it. Stock charts added the anchored volume weighted average price, wealth charts. And there's other ones that or Trading View is a big one. They just added it this year as well. So now it's in the hands of a lot of people who can use it. But a lot of people are saying, like, they asked me the same question, which I understand. Like, well, where do I anchor? Well, read this blog post, go look at my website. I've got a VWAP tab, but I need to, just get it concise altogether.
That makes total sense. And in fact, I wanted to pull up your Twitter real quick. It's Alpha Trends, right?
Yeah. Yep.
Okay. Because like you do so much, and that's one of the things that I think is incredible, how much work you're doing on here, and how much you're showcasing the Anchor VWAP, just like
Right.
over and over and over. And I think that being able to showcase that is so important. That way it's not just like, hey, it's really good, trust me, right? But you can actually show it on there over and over. I mean, you've got several things just today showing, different arrows and different things that it's bouncing off of. So, I mean, you do incredible work, and that shows because you've got 132,000 people that are looking at your posts. And that, I mean, you're making a difference in the world, man. I know that sounds crazy to think about, but if what you and I can do is help other people find a financial edge, and in some way that impacts them, and it impacts their family, and it impacts those around them and their communities. Like, I think that's what people like you and I are sent to do. And like when the coronavirus happened, right? I'm looking at all these restaurants and there's nobody in them. And I'm looking at the waiters and they're like, I don't know what to do. Like, that was when my like giving light came on. I'm like, this is where I can make a difference. And I'm not at all trying to brag, but like my tips quadrupled in the time that the coronavirus has been on. And now that's like my new standard, because it's like, I know that I have a position in life where I can afford to give you more money, and I know that I'm doing my part to help further you in your journey. And I think that that's the case here with Brian's Twitter, is because you provide so much value up here, and that's why people really flock to you. And I think that's incredible. So thank you for that.
It's work I'm doing for myself anyway, so might as well share it as well. And and I'm not here to plug a service, but I do have a service. If you want to take a further look, then I do videos every day that kind of drill down and explain what we are talking about live on a chart, pointing it out, clicking the VWAP and showing where, it's kind of the master class day to day. It's not just a hindsight book where you can easily come up with pictures and say, here's how it works perfect. And that's the thing I'm going to do with this book as well, is say, here's how we would look at it. Here's why we take a stop. It didn't work. And guess what? That's the way the market is. It doesn't always, it's not textbook perfect cookie cutter examples.
Brian, I'm sure you're familiar with the pervasive fake gurus all over social media now.
Yeah.
Dude, I couldn't tell you how many times I've lost and talked about losses and explained my losses and just went in full detail.
Right.
And I am so good with that. And then you see the opposite end, right? Because I'm pretty sure I'm not going to scroll through here and see your Lamborghini. I'm just guessing. Yeah. I mean, you could probably scroll through mine if I'm my Lamborghini, but there's this whole fake guru thing going on right now, and it's going to come back and it's going to bite these people at some point. But finding somebody like you that gives, that really cares, and knows your stuff, I think is incredible. And Brian, I'm so excited to have you on and to learn more about your story and to chat with you about all this. Man, you dropped so much knowledge here today.
Cool, thanks. I hope your audience appreciates how to understand it, because it's difficult to kind of see the chart that I'm trying to explain. It's going back to, I like to look at pictures. I never, as a kid, read Playboy. I looked at it, and to describe it, I mean, you can describe it, I guess, a little bit. I shouldn't go in this area, I guess. But the point is, where you could, to see it on the chart as you're describing it is, and every Friday I do a free video where I go over that and put it on YouTube and talk about the market and some stocks. So that's another thing, way that people can look at it and for free.
Cool. Brian, what's your YouTube channel?
I think it's Thermal One, THERMAL number 1. Because I used to be into hang gliding, and we'd ride thermals.
Oh, wow. That's cool. Hang on. There you are, Brian Shannon.
If
All
you look
right.
at non-market stuff there, I will tell you, Chris, there is a Lamborghini video.
Oh, no.
It was 10 years or so ago. I rented it for a half a day in Las Vegas because I'm a car guy, not because
Yeah.
I never used it to promote anything, but because it was just awesome to drive.
You know what? I've done the same thing. I rented, well, it was a birthday present. It was a day with a Ferrari at
Oh,
a
nice.
racetrack here. Dude, that was a lot of fun. But I gotta tell you, like I on a normal basis, I was talking about this on the other podcast, so I don't mind sharing. On the normal day to day, I drive a Mini Cooper. Like
Yeah.
it's not ostentatious whatsoever. But they must have had that Ferrari tuned down because my little Mini Cooper with the turbo on it, I think it could
Really?
have kept up. Or maybe my
Wow.
Mini Cooper's just that hot. I don't know.
The interesting thing is when I went to the rental place, I'm a Ferrari guy, or
Mhm.
I envisioned myself one.
Yeah, yeah.
The Ferrari was broken down, so they said we'll give you the upgrade to the Lamborghini. I'm like, that's not an upgrade, bro. And they gave me this flashy yellow
Oh
Lamborghini.
man.
It's just not my personality. I felt like some flashy NBA player who just signed a contract. But the crazy thing is, when I got into that car and sat down and started gunning it, it was weird. It became my personality. It was kind of scary.
Whoa, that's interesting. The Ferrari that I drove, it was a red 360 Spider. So I'm sure you
Nice.
know all about
Yeah.
that. Are you a Formula One guy?
I'm not. No.
No, I was
No.
gonna say Ferraris are. I mean, Ferrari or Formula One was meant to be a showcase for Ferrari, but there hasn't been the case for the last couple of years. So
Ah. Okay.
yeah, no worries though. Well, Brian, here's what I'm gonna do. I would like everybody who's watching and listening to go to alphatrends.net, not .com.
Right.
Then after that, click the link below for Brian's book on Amazon called Technical Analysis Using Multiple Timeframes. And then I'm giving people homework here. Head over to Twitter to Alpha Trends. And then when you're done with that, head over to Thermal One on Brian's YouTube channel. I mean, you have videos. I mean, yeah, these are up to date. You've just got one from last week, and I bet you're going to put one out later. Yeah.
Yeah.
That's awesome. And it looks like the picture is a little bit older because you might have a couple extra hairs.
I'm gonna have some hair on that picture. Yeah.
Listen, man, I know about that. I take hair pills. I want to keep what I got.
Gotcha. Yeah, that ship sailed.
Brian, this has been a lot of fun today, man. I really, really appreciate your time and being able to hear your backstory, to hear all these incredible details about the Anchor VWAP. And man, you really dropped a lot of knowledge. And I highly encourage the audience to go back and listen to this episode a couple times, just on what Brian's saying. Don't worry about what I said. Go back to what Brian said and listen to that, because he dropped crazy, crazy knowledge today. Brian, thank you so much for your time.
Thank you, Chris. Been a pleasure.
And thank you. Okay, so what'd you think? That was pretty incredible, right? Now, if you liked that, that's only a taste, only a sample of what you're going to find in the full AI stock trading system. And I really highly encourage you to go and check this out. Obviously, you are interested in learning on how to trade, and that's why you're listening to this podcast. Now, I'm going to take and download my entire trading system that I use day in and day out onto you. And the only way I'm going to be able to do that is over at the AIStockTradingSystem.com. You're going to get phase 1, 2, and 3, several bonuses, and on top of that, I'm going to walk you through over a dozen trades that I put on inside of my account, holding your hand and showing you exactly how I got in, how I got out, how I use the artificial intelligence data, and how this could work inside of your own trading portfolio on a daily basis. So make sure you head on over to AIStockTradingSystem.com. That's AIStockTradingSystem.com to learn more and to get started and to download my decade plus worth of trading experience into your hands so you can start using the AI stock trading system today, the 5-step system to take the guesswork out of trading. Hey, if you like this video, let me know by leaving me a like below, and then subscribe and share it with somebody you think could use it as well. Be sure to comment below with your biggest takeaway from this episode and any suggestions you have for future episodes. And finally, make sure you watch these other videos to help you trade faster and trade smarter, and I'll see you on the next episode.